Good afternoon everyone, Sage here live from the 𝐊𝐴𝐼𝐼 studios in Sydney, and you're watching The Buzzing Trends, a show that brings to you the emerging trends driving the market momentum and the related stocks under the spotlight. Well, we have seen the miners often pulling up the strings of the ASX 200, just like today amid the much talked about commodity supercycle under the scanner this year. So in today's show I'm going to touch upon 5 ASX mining stocks as iron ore prices rally. And the iron ore, one of the hottest commodities, is experiencing a bullish market for quite some time now, and since the beginning of 2021, prices of iron ore have continued to grow on the back of high demand for steel. Of course, there are occasional corrections in the space amid the demand-supply dynamics that cannot be overlooked. And while the prospects of iron ore theme are under the scanner for the year 2021, I am pleased to present to you a few ASX-listed mining stocks. First on the list is BHP Group Australia. Headquartered mining giant BHP Group returned more than 16% till date this year as of the 21st of July, and in comparison the stock gave a return of roughly 10% over the last 1 month, and much of the price rise was backed by climbing prices of commodities including the crude oil and iron ore. And this company is under the investors' radar today as its shares soared. BHP Group is considering selling its large oil and gas business to accelerate a move away from fossil fuels, and meanwhile the mining czar released its full year update yesterday, revealing a full year iron ore production of 235.5 million tonnes, almost in line with its March guidance. The company mentioned selling between 245 to 255 million tonnes of iron ore for the current fiscal year. And across its other divisions, BHP reported an 11% increase in nickel production for the year. However, production from other divisions fell, including a 5% drop in annual copper production. The company reported facing COVID-19 related logistical challenges in Chile, where BHP expects conditions to remain challenging. And notably, the company experienced strong pricing in the annual year, with the average pricing of iron ore increasing 69% to US $130.56 per wet metric tonne. The company now expects to record a robust free cash flow in August. Second to make the list is Rio Tinto. Well, this London-headquartered RIO company is an Anglo-Australian metals and mining company. It sells copper, gold, aluminium, diamonds, borates, titanium dioxide, salt, iron ore and uranium. And RIO share price has risen more than 18% over the past 1 year, current as of 21st July. The world's second largest metals and mining company, Rio Tinto, announced its second quarter production update recently, and the update was not an upbeat one as the company produced 75.9 million tonnes of Pilbara iron. The production is 9% lower than the second quarter of 2020, and shipments stood at 76.3 million tonnes, which was also 12% lower. And besides that, due to labour and equipment availability concerns affecting the product feed, production of pellets and concentrated iron ore company of Canada was 2% lower than in the second quarter of 2020. IOC is a joint venture between Rio Tinto, Mitsubishi and the Labrador Iron Ore Royalty Income Corporation. However, Rio is upping its game in the climate change global agenda, along with decarbonisation and renewable energy solutions. And recently, Rio signed a memorandum of understanding with a South Korean steel-making company, POSCO, to jointly explore, develop and demonstrate technologies to transition to a low-carbon emission steel value chain. Rio has also signed a MOU with the leading company in digital transformation of energy management and automation called Schneider Electric for a first-of-its-kind collaboration to develop a circular and sustainable market ecosystem for both companies and their customers. The next market player that we're also keenly eyeing is Fortescue Metals Group. And Fortescue is one of the top 4 iron ore producers globally, the leading mining player mines, processes and transports iron ore from Western Australia's Pilbara region to various parts of the world. And the company has given a return of more than 50% to its shareholders in the last 1 year and 530% in the last 5 years. And that was current as of 21st July. On the financial front, Fortescue Metals revenues climbed 44% to $9.34 billion in the first 6 months ended 31st December 2020, while net income rose 66% to $4.08 billion. And notably, Fortescue is leading the way in reducing its plastic footprint by becoming the first company in the resources sector in Western Australia to remove all retail single-use plastic beverage products from across its business. And now it's time for a short break, but please stay tuned with us as we'll take you through more interesting mining stocks on the Australian Stock Exchange soon.
New Zealand is unique, and 𝐾𝐿 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐾𝐿 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐾𝐿.co.nz.
Welcome back, viewers. This is Sage again, and you are watching The Buzzing Trends, where we are going to discuss the mining stars amid the overall iron ore price momentum. And Mineral Resources deserves a special mention here. Well, the company claims to be Australia's 5th largest iron ore producer. It plans to treble its iron ore production from 20 million tonnes per annum to 90 million tonnes per annum in the next 5 years, with a market cap of roughly 11 billion Australian dollars. Of shares of Mineral Resources have offered a return of over 54% this year, current at 21st July. Its financial footing proved somewhat resilient during the pandemic, and for the 6 months ended on 31st December 2020, the revenue grew 55%, reaching 1.53 billion Australian dollars. And although the company's net income decreased 41% to 519 million Australian dollars, the company recently secured rig to drill conventional gas well Lockyer Dip 1. For your information, the project is located in the highly prospective northern section of the Perth Basin that is host to several significant recent conventional gas discoveries. The next mining share under the radar is Champion Iron, an iron ore mining and development firm specialising in first-grade iron ore mining. The corporation has significant properties in Canada's southern Labrador Trough region, and the company has a market capitalisation of roughly 2.3 billion Australian dollars. And notably, the share prices of Champion Iron has been up by more than 50% this year, as of 21st July 2021, giving better returns than the mining giants, such as BHP and FMG. And the early production from its flagship project, Bloom Lake, in the fiscal year 2021 was $8 million, or 8 million wet million tonnes, It's an annual recovery rate of 83.5%, beating the company's expectations. And on the financial front, its revenue climbed by 63% to 1.28 billion Canadian dollars in the fiscal year that ended on March 31st, 2021. And its net income climbed 5 times. Well, viewers, that was a fairly short and succinct one. A time to wrap the show up, and that's all I wanted to discuss about the mining stocks today. Overall, before taking exposure to mining stocks, the sustainability of commodity supercycle needs to be closely evaluated. If we zoom our lens on the commodity space, there is a significant market chatter about a crude steel production limit in certain Chinese provinces this year. And on that note, it will be interesting to see whether the market will witness an oversupply of iron ore or demand side scenario will continue to drive the prices higher. Hope you found the show informative. Keep watching 𝐾𝐿 TV as we bring you the latest news and trending market updates live from Sydney. We have another Buzzing Trends show at 3:30 p.m. today, bringing more interesting market trends for you. Sage signing off.